Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, April 24th, the year 2020. Let's talk trading. Weekly wrap up. Okay, boys and girls, non-binary traders, remember these videos for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And when you're trading, remember, don't lose any more on any one trade than you're willing to lose. And I have Walmall on the line. How's it going, Walmall?
Things are going pretty well. I mean, you all know what I did on Tuesday and how disastrous a day that was. But at the end of the week, I exceeded my goal for the week by twice. So, or not twice, but half again. So, been a pretty good week for me, and I hope it's been good for all y'all.
Yeah, and all you weekly gap traders, I think you know by now, all the weekly gaps filled were 92 pips off the weekly bottom and 80 pips off the weekly high. So we're we're 48 pips below the weekly open for the euro. And we've got a green day here. The first 4 days of the week were all red, so red rats were feasting pretty much the entire week here. But now the green rats seem to have come back and decided to take some cheese. And you can see here on Tuesday, Wednesday, and Thursday, we had gone into the weekly opening range here, the first day of the week, and then you see the price dropped right out. And you can see the same thing here on the inside bar. We actually crossed below the weekly inside bar of 3 weeks ago, but now we're back up and between those levels. Today's ranges, we only have 5 over 100. The euro clocking in at 93 at the moment, 3 pips off the daily high. Buy zone, you see we took out the pivot here. We got a signal here at the first hour. I don't know how many of you guys trade the first hour, but that would have resulted in a loss. But then here, starting 4 hours ago, 3 hours ago, and even the previous hour, all gave buy zone entries from the daily open. And looking at the smart rat here, you can see smart rats and the original rats both got cheese. We're now in red rat territory and definitely in smart red rat territory. And once again showing that pivot chart, we took out the pivot right there. On the daily, we took out the pivots here. We still have a missing pivot at 109.17. And on the week, we took out that pivot earlier this week. And we haven't missed a weekly pivot since September 30th of 2018 on the euro. In and out of the lower wick zone on the daily. And that brings us to the Walmall method. Walter, tell them how you did again.
Well, I did pretty well today, and what I was able to do is I was actually trading the pound today and not the euro, mainly because I've been seeing better ranges. I had walked away from the pound for a little bit just because the spreads were just ridiculous to pay. But now the spreads seem to have returned a little bit better. So the last couple of days I've been trading the pound, but I did really well today. I was able to go and get 2 trades where I actually, one I made 12 pips on, the other one I was able to get 5 pips on it. And so I did really well with that. The other thing is we just had a Walmart trade as the video started. I didn't go and jump in that because I'm done for the day, but that would have been worth, potentially you could have picked up 9.3 pips on that. And again, like I said in yesterday's video, you know, I don't take the first break, I take the second break. And yeah, that cuts me out of some trades, but it just seems, I'm glad I did. I would have been glad that I did that because it would have gone all the way down, almost hit the stop. It wouldn't have hit the stop, but man, it would have been close. And so like right now, you would actually be up 9.3 pips on that trade.
Well, if you're, I'm looking at the, I've got the pound up here, and that I'm looking at the 1 minute candle. Going by your rules, that first trade, you would have missed out on it. But the second trade would have been a nice trade worth almost 10 pips. And then to the upside, if you didn't take that first trade, as you said, because then it hit that 40 line, came all the way back down to the 30 line, so you would have stopped out there. But this second one that just happened 1, 2, 3, 4, 5 minutes ago, just hit the 50 line that last minute, you might have punched out for 9 or 10 pips.
Oh yeah, absolutely. Yeah, so I trade on the 5 minute candle, so I only saw the very first candle that crossed it was at, for me, was somewhere around 15:10, so 10-minute mark, somewhere around there. So I would not have taken that. I would have waited for the next 5 minute candle, and when it crossed it pretty convincingly.
So you're doing 5 minute candles on Wall Mall?
I am, just because I find that if I look at the 1 minute candle, it's just, it bounces around a little bit too much. I like to go and see. So, for instance, I get the first crossover happened at the 11 minute mark. It crossed over there, and then I wouldn't have taken that trade. Okay, I would have waited for it to close below it. Okay, and the next time they crossed above it rather, was at 15:18. So I would have had to wait an entire 5 minute candle to go and cross above it again, and that's where my entry would have been.
Okay.
Does that make sense?
Yeah, makes sense to me.
Okay. And and the thing is, I would have run up on this trade. If I would have taken this trade, it ran up almost up to 10. I would have moved my stop loss to 5, and it would have knocked me out at 5. But everybody's got to set up their trading plan the way they work. If you didn't do that, you potentially could have actually gotten to 10, and actually got maybe even 11 pips on that trade. But to me, I want to go and protect what I got, and so I want to go and take what I can. So I didn't hit 10, but I was real close to it. I'm taking 5, calling it a day.
Yeah. Yeah, actually, and before we start this video, Walmall and I, we were talking about a few other things. What was it I said I wanted to, we were going to talk about?
Oh, I don't know. We rambled there for a while.
Well, one of the things is that we were talking about was, people, the traders out there, this wall mall method is just basically a simple breakout method. We're looking at H1, and we know that the range is probably going to be, I think, on the pound, 20 or more per hour.
Right.
Is that what this? Yeah.
Yeah. In fact, if you look at today's range so far for this hour is 30. The hour before is 39. The hour before that's 24. The hour before that is 34. The hour before that is 42. And then 30, and then 24.
Right.
You're talking somewhere between 24 and 40 pips that you're going to range. We're looking for a breakout of a 10 pip range. The worst case scenario is you're going to go and stick out 5 pips on each end.
Right.
That's the worst case that you're going to see. And you may take a loss, but that's why in my trading plan, if I go and crack the zone, and I do not get, it doesn't go my way, that's why I'm looking to get out pretty quick. I'll take a loss, 3 pips, 5 pips, whatever. It's no big deal. And I'll be looking for a trade either to get back in that same direction, or I'll look for a trade on the other end. But that's consistent of what the pound does. The euro does the same thing. It's just the ranges aren't as big, so you look for a little bit less. But that's what you're looking for. You just got to go and jump in and take what the market gives you.
Yeah. So, for example, right here, we just crossed back down below into the wall mall zone, and you had a potential to take 10 pips, and this is why we don't look for those 100 pip, 50 pip, 500 pip runs that you probably see, traders talking about in their email.
No, That's not what this method does. This method, the idea is, I said this earlier, this method, I'm looking to get 10 pips, 5 pips, or 1 pip. And the idea behind that is, if I get 10 pips, I'm happy. Give me the 10 pips, I'm walking away. If I don't get to the 10 pips, or and it reverses on me, then I'm going to take my 5 pips. And if I happen to make 5 pips and it doesn't go up to the 10 pip mark, and it reverses on me, I'm taking my 1 pip, and that's how you have to look at it. And and that doesn't mean that you necessarily let it go all the way back down to 1 pip. If you're pretty convinced that it's just not going to stop at that point, jump out early, maybe get 2 pips or 3 pips. That's okay, that's fine. But that's the goal of this method. I'm not looking to go and make 50 pips on this one trade or more. It's not designed to do that. It's designed to go and take advantage of what happens in the current hour that we're in.
Yeah, and
not in across the day.
Yeah, and I remember one of the things I wanted to talk about. We were talking about really sticking to the plan and saying, you know what? See, most of the things that we talk about here is not the wall mall method, because the wall mall method is basically price comes to the line, you go long. Price comes to the line, you go short. Sometimes you win, sometimes you lose. And on any one particular trade, we don't know if it's going to be a winner or loser, but we know over the course of time, trading this method's like a casino. We have statistics in our favor. So if we keep doing it, we are going to be profitable over the long haul. And I think, Walmart himself, you talk about your bad Tuesday and what's happened since then,
Yeah, and it's exactly right. I mean, I was down a substantial amount of cash, on Tuesday. After, about 3/4 of the way through the day or halfway through the day, I was down a substantial amount of cash. But I knew the method was solid. I'm not changing my method because of that. The odds are with me because statistics have proved that out. So what did I do? I kept on sticking to it and plugging away. By the end of the day, I was down still, but I was only down half as much as I was. The following day, I had a fantastic day. And now I had made the money I needed to make for that day and made up all the money for the previous day, and I even had money left over that actually paid for what my profits should have been for the previous day as well. So after that second day, sticking to the method, I was able to go and make up and be where I needed to be in terms of target.
Yeah, and it's kind of funny when you said you where you needed to be. That's part of that Ken Revisa, Ivan Longoria video I usually like to play before I trade to get my mind right, because I know Walmal's a former baseball player, and the thing about it is, we were talking earlier, he said something about, well, I wasn't where I needed to be and price reversed on me, or I should have been paying attention. I said, yeah, Walmal, when you're in the game, you're playing in the infield, you better pay attention, because that ball could be coming at you at 100 miles an hour and hit you in the head. And so when you're in the game, when you're in the trade, you're not focusing on that pretty girl sitting in the front row. You're focused on the game.
Absolutely.
Now when you come off the field, then you can smile at the pretty girl, and then until it's your turn at bat, and then when you get up to the plate, now you're all about business again. So when you're in the game, you got to be in the game. And most of this trading is being in the game at when you're supposed to be.
Yeah, and part of that is it's sort of like using another baseball analogy. If you look at a baseball player when he's on the sidelines, and he's in on deck circle, what is he doing? Is he just sitting there twiddling his thumbs? No, he's actually watching the balls as they come in. He's actually timing the balls as they come in. He's actually swinging with the pitch so he can be in sync with what's going on. Well, in trading, there's a lot of that as well. You need to be prepared, and part of that preparation is what you do ahead of time. Part of that preparation is maybe getting to your charts.
Yeah, and time. Yeah, and you know what, Walter? We're out of time. Speaking about time, yeah. So, fellow traders, we hope you had a great week out there. Have a safe weekend, and when you come back, Remember, it's not what you trade, it's how you trade it. So, drain the banks. We'll see you next week.